Hey, how's it going, everybody? For this week's sessions with Sharky, guess almost Halloween edition. Hopefully, everybody stays safe tonight if you're going out having fun with friends and family, all that fun stuff. But yeah, Halloween's here on the 31st, so on Monday, so definitely coming up. Yeah, so as always, we'll start off with some personal development. This is going to be a little bit more of financial literacy, explaining some of the backdrop to financial markets and how did we get to where we're at now in 2022. This guy Bill Still, he's pretty much dedicated his life to this type of research and information, done a fantastic job. Some of the documentary is a little dated here, but the information in it is it's a must watch. There's actually two parts, so this is going to be part one. I'll link this into the show notes, that way you guys don't have to dig around for it, but um, 10 out of 10 would recommend. It's definitely very eye-opening. Talks about the whole money changers and the red shields and the green shields, and red shields right originally were the Bowers, but they changed their name to the Rothschilds. So a little bit of breadcrumbs there. So anyway, when you watch this, make sure you're wearing your tin hat and all that fun stuff. Um, yeah. Anyway, that's all tongue in cheek, but it's also very much factual, which is eye-opening at the least. Just to kind of touch a little bit more about the whole money changers and all that. There's some scriptures about Jesus going into the temple and cleaning that out. So, for anybody interested in that, Bill Still, the Still Report. I think YouTube kind of shit on him a little bit, so he's over here on Rumble as well. And like I said, I'll drop that into the show notes. Again, it's definitely quite lengthy. You're not going to be able to absorb it all in one sitting, but if you're looking for education and history and backstory for all this, definitely check that out. Just to kind of continue on the PMA personal development side of things. I know last week we talked about Jim Rohn and things like that. This week I'll drop out Naval Ravikant. He has this tweet storm, which is pretty well known. I think there's even a book about it with Tim Ferriss and those guys. But in any case, this link here again I'll drop in the show notes. But just guy rattles, and so much good information in here. Definitely eye-opening. Gives his perspective. The guy's done a fantastic job, and he's also shares information freely, which is amazing. I think his heart's in the right place. He knows what he's talking about, and there's definitely a lot that we can learn from, and definitely bits and pieces here. This part here jumped out to me. Just understanding that ethical wealth creation is possible. So you can win, I can win. We don't have to shit on each other and step on other people. The whole crab's in the bucket to get ahead. So that's just one thing I'll highlight there. And if you don't follow him on Twitter, definitely check him out. I know we talk about like Epictetus and some of the Marcus Aurelius as well, the Stoics from then. I think he's kind of a modern day Stoic. I think a lot of these people that have these similar ideas, as they say, nothing new under the sun. But anyway, I'll drop that in the show notes definitely for anybody that hasn't heard or checked that out yet. A lot of value in that. I did get some feedback about some of the topics, and I'm just kind of rattling off a million different things. So I'll just kind of use the analogy of jujitsu. So if I'm going to teach somebody, I taught Brazilian jiu-jitsu to 4 and 6 year olds. So teaching triangles and arm bars to little kids, but there's also a way of scaling that up and speaking to somebody at a higher level, but then also somebody at a lower level can just glean a few of the core basic details. So um, this would be one of those kind of breadcrumbs or basic details. Really good education material in here from some of the guys here at Momentum Analytics. So again, I'll drop that breadcrumb in the show notes, as well as Investopedia. Think of it as the Google. So again, if you're brand new and you don't know like what's a simple moving average, an SMA, we'll talk about EMAs, and there's all a handful. Like there's like 5 or 6 different types of moving averages that are fairly popular. But a simple moving average and exponential moving average are going to be kind of the default like two. So again, if all this stuff is way over your head and you're brand new, like you just got like some random app on your phone, and MSNBC says to buy or sell this, da 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 da, and that's where you're at. That's fine. Just understand that there's a lot of maybe not the greatest information out there, but then there's also a lot of really good information for those that take the time to dig through. So I'll try to save you some time and drop some of these breadcrumbs again from a personal development standpoint. This is going to be a good one. Momentum Analytics. These guys are solid. They're out of the UK. Went through the education program prior to me. Solid people, integrity, and all that stuff. Plus, they give free education to the public as well, which is super rad. And then again, I'm going to drop this breadcrumb here from Investopedia, just again for your own education. So let's go ahead and get into the markets. Again, I don't technically trade based off news, but I do definitely keep it in mind. There's a couple major items that are coming up. We got the Fed interest rate decision coming up here November 2nd. We got the election on the 8th, so heads up there. We also have some manufacturing data coming out the first. So next week is going to be, yeah, party, right? So just be mindful of all that. And yeah, so we have midterm elections November 8th. So let's see what the date on that is. So next week and then the following week is going to be elections. So yeah, definitely keep in the back of the mind, see how things are going to go. If we're going to be rallying into those type of things, that's usually a heads up. And then one thing I'll kind of touch on here with the whole money masters, we got the Fed interest rate decision. This is a website and a resource I like to pull up just to kind of bring me back down to reality. So we have the U.S. national debt. The federal debt to GDP ratio is now 121.52%. That's not good, not sustainable. So anyway, this is just one of those kind of sobering reality things I like to check in on every now and then, and just kind of, if you're half asleep, perfect. So let me go ahead and close that. Sometimes, again, they're printing money and the debt's going so much it's going to bomb my computer. That's freaking hilarious. So anyway, I'll drop those resources in the show notes so you guys don't have to fish around for them too much. But so let's go here to yield Bitcoin. And we kind of talked about last week, there were some signals potentially, looking uppy, and definitely had a positive week. We have location. So for me, with my type of position trading and investing style, first thing I look for is location. I use Fibonacci retracements and horizontal support and resistance primarily for that. I'll also use volume profile. Again, if all of those concepts are way over your head, pull up Google or Investopedia and type that in, just do your research and you'll find some information. And again, as I go through these videos, I'll keep saying these little things and I'll also drop some show notes to kind of help drop those breadcrumbs for you guys as well. But yeah, so we have trend line. I want to see market structure on the other side, but definitely uppy is good. We've been down, the overall trend has been down, but looking left, we definitely have support at this 14-15 area. And what are we at? Yeah, 20 and change right now. Internals are looking pretty solid. OBV, so volume is ticking up from a bullish standpoint. So with all of this, it's going to be supply and demand dynamics. So we want to see buyers showing up at these prices and more and more buyers. So that's going to be important for me. Following last week's video, I went ahead and put this little demonstration on how I would trade a 4-hour time frame based on all that information. So we had market structure. It's a Dow double bottom. Again, if you don't know what that is, Investopedia, Dow, DOW. So double bottoms, call them M's and W's. So this is a W, a down, up, down, breakout. That's going to be market structure. That's the last of my trade setup process criteria that I look for. So let the W come in. I'll drop my fibs. So using the Fibonacci retracement tool, which is a very standard technical analysis tool. And that's a way of us measuring location. And after this rally up, where is the market likely to come back? So if we come back to 618, again, if this is a rip-roaring bull, new bull, might get left in the dust, fair play. But anyway, I wanted to kind of post that. I think I posted this. Yeah, I did post this one on my Instagram, and I'll kind of just do weekly updates on that for anybody that's a little bit more advanced, that's interested in swing trading. Just kind of get an idea of how I would be kind of using this information and applying it real time in the markets. I think my first one was on the futures. I'm going to just do it, use the spot market off Coinbase, since futures is probably a little bit more advanced, etc. So I'll just keep it on Coinbase just to keep it a little bit slower for the general public in case there are some newer people there. So we'll do that. The Bitcoin volatility study, again, which was giving us some signals there, like, hey, heads up, it does look uppy at this point. Let me mark off this level here just so I can visually see that. So yeah, so 17.5 was that level. With this historical volatility that I like to follow, we kind of got an idea of, hey, again, just because we have these signals in the past doesn't guarantee that this is what I'm going to do in the future. But again, we'll just take a bunch of different information, collate all that information and hopefully stack some statistical probabilities for one way or the other, right? So we have RSI Wing out, oversold here on the, yeah, so that was, June. So we had some signals there. That's definitely very bullish, and it looks to be a bullish continuation there for me. So all of this is very positive, strong signals. So that's, that said, it's not going to go, or this doesn't imply that it's going to go to new highs today or anything like that. But when we see volatility coming out of the market, that typically means, heads up, pay attention. And based on location and things like that, and based on some other internal indicators, it appeared, at least as of last week, and still appears as of this week, to be stronger for the bullish case for sure. So that's what I'm seeing there from a John Bollinger standpoint. Yeah, so I mean, we've already kind of talked about, hey, things are looking pretty bullish, fair play, got location, I have these levels. My moving average study that I like to follow, is telling us, hey, this thing's waking up. So again, that could potentially be the start of a new bull market. And then, these moving averages also, they flip around, they bounce around. So could be awakening, today, and the next 2 or 3 days, end up turning back down. All of this is going to be predicated on buyers showing up. And again, supply and demand dynamics are, volume speaks volume. So supply and demand is going to be key, crucial for that. If this is, we do get buyers and things are going to rally in earnest. For me, it's this 37 and change is kind of the level that I'm looking out for here. If we want to look left, then the most conservative level for me is going to be this 25,338, and beyond that, it's going to be this consolidation here at about 30. But again, I'm going to say 32. Or I'm sorry, 37,214. Just to mark off some levels on where we can kind of expect this to potentially work its way up to before, being tested in earnest. So yeah, as of now, everything, all these moving average studies, everything is looking uppy, which is good, positive. Again, just be little concerning looking that positive prior to a Fed interest rate decision meeting, and prior to the midterm elections. But maybe the markets, they're already, participants are already aware of what's going down, and it's pricing it in. So yeah, we'll get the popcorn, we'll see what happens. And this is another horizontal support and resistance study I like to follow. This is hash ribbon, so Bitcoin is a proof of work blockchain. This is a signal that we can get considered. So there's fundamental analysis, technical analysis, and quantitative analysis. Kind of the three major schools. I'd consider this a quant. I like to keep an eye on it, especially for halvening cycles and things like that, and just kind of get a high-level macro overview of kind of what miners are doing and kind of what their motivation is, etc. So it appeared through all this that there was some capitulation, and we saw historically times like that. And again, this is just one signal. We didn't want to take any decisions off just one signal, but I like to take bits and pieces from them all, and it just gives me a pretty decent picture of what's going on here. So from a location standpoint, again, not to beat a dead horse, but definitely have location here. I think last week I zoomed in just to give some of the lower time frame people some different levels. And I think what I said here is we lost this level here at around 18. I'd be hunting, trend continuation, or, short pushing a little bit lower, being very careful with my stops just based on how far down we already are. This level here, though, at 17.6 and change, is a weekly support and resistance level. So that tells me there's going to be significant support down here. And based on what we see here, this is a nice down, up, down, breakout. We did break this level here, and again, I was going to short these levels, and I'd be buying these levels. We've also have the 90 day, so it's a daily chart, so it's a 90 period MA. So this is going to be a simple moving average. Going back to this little guy here, just to kind of tie in some different concepts there. The guys over here at Momentum, they actually have a dollar cost averaging strategy, which on Bitcoin specifically, where if Bitcoin is below the 90-day simple moving average, they essentially turn on their dollar cost averaging strategy. So again, another little breadcrumb. If you've never heard of anything like that, write that down, do some research, and hopefully you can put the pieces together and add some value to what you got going on there. But yeah, looks like we have close here above. Got a little bit of time here left, but if we get a close above this 90-day SMA, that'll definitely be bullish, or yeah, definitely not bearish, that's for sure. And yeah, our next level here is going to be 22 and change. So if we could close up here, consolidate, again, get some more buyers to show up, definitely have a case for, yeah, so 22,753, and then if we can resolve through that, we got this, 25, 25 and change, just 25,161's that level there. Just again to retest these highs. So for the shorter time frame players, those are kind of some levels that I would be interested in on Bitcoin. So yeah, things are looking positive. Also in altcoins, I figured to give, maybe not everybody's just interested in Bitcoin. Give you guys a couple different names that from a fundamental standpoint I like longer term, that aren't Bitcoin. So we have Uniswap. So this is kind of DeFi 1.0. I've noticed some of those names look strong, even some of the DeFi 2.0, but some of the original DeFi names have come off a long way, and then there's definitely closer to the bottom than top, that's for sure. And some of these look like if somebody just sneezes that there's going to be some violent pop. So for me personally, I keep my risk percentage on some of the better altcoins, maybe 1 to 2% is what I'll keep the risk allocation to. Definitely not more than 3. Hard fast rule is 5%, but yeah, again, I keep my hard fast rule about 3% just to keep my risk exposure from a risk management standpoint solid, because anything can happen. These things can go to zero, just as fast as they can go 10x. So we got Uniswap, Chainlink, it's an oracle used by a lot of different popular blockchains. So Chainlink, solid product. Uniswap, obviously, is one of the DeFi swappers out there that everybody is familiar with. This might not be that well known. It's Orchard VPN, the Edge and Node people. Edge and Node, they're team behind the Graph. Again, indexing of all the blockchains. Think of Google for the internet. The Graph is for Web 3.0. So that team behind that is Edge and Node. So a little bit of alpha I'll drop there. This thing's 9 cents, and look at the upside. So there's a couple. This is more of a moonshot, but solid team behind it. Came off a whole heck of a lot down at the bottom ends of ranges. Again, follow your own trade plan. Do your due diligence, things like that. Definitely mind risk management, all that stuff. Do not bet the farm on any of this stuff. But this is going to be one of my I like the people behind Edge and Node, so I'll mention that. And I like the product or project. And then we have Polkadot, so kind of an Ethereum kind of offshoot. Again, off a whole heck of a lot. This one's on Coinbase. Let me grab maybe a little bit more history just to get an idea. Yeah, so it gives you a little bit better context of what we're doing. So again, we look left, we're at the lows, from 2020. So appears the reset button has been pressed. Again, doesn't mean tomorrow that any of this is going to go skyrocketing up, but Richard Wyckoff, I'll pull this up actually for you guys just to give one last little piece of insight and kind of how I approach the markets. Just to keep it super simple, let's go Wyckoff. Here we go. Let's see here. There we go. So Wyckoff market cycle. Me personally, I like to accumulate. So think of it as like a wholesale to retail business, right? We accumulate it wholesale, and then when the whales, smart money, etc., 4-year cycles, business cycles, whatever cycle it is, market process, then we distribute up at the top. So we accumulate wholesale and we let it go, as it's quote unquote retail. And as you can see with some of these, with altcoins and a lot of venture capital, 10x is actually pretty common, if you have the patience and discipline to see that out. But yeah, I hope you guys have a very safe and happy Halloween, all that fun stuff. Don't eat too much sugar, the white devil. Brush your teeth, do your push-ups, do your burpees. Stay safe, and yeah, I'll put another one of these out. Yeah, next week, next Saturday, Sunday. All the best. Take care, you guys. Bye.